Hello everyone, welcome. I'm going to break down this crowd trade real quick. Gonna make this quick video because I gotta be smart. Anyways, let's get into it. So, real quick on this crowd setup. So, coming into this, here is how I set up this 2950 zone. Let's go over to here at 714. So, the first interest of this zone is these two candles here. We have this kind of like wick and this candle wick, and then we have we have it open here, and then we finally rip through. But then we break back down it, and then this candle here wicks and fails, and we stay below, and we kind of just sit here in this intraday and then pre-market. And then on the 17th, we perfectly wick at 209.50 at this top wick here. And we kind of just float there with all these, top wicks. Next up, we have this kind of just intraday failure, kind of just pushing into it and just going weak into this 209 area. So coming into today, I knew, with the NASDAQ was like 1,000 points today, so pretty huge. We have this amazing consolidation structure in this whole zone. That kind of just screams like, okay, we're going to start buying back up here. We're going to buy this dip with the holding of the 50 SMA. So I knew, all right, we have this strength. Market's also pumping. I can see here, okay, if we get this break and then the pullback retest, I can shoot this long with calls, in which we got perfectly. Now, a little thing that makes this a tad scary is that coming into this, I knew, okay, if we get this break and retest, it's probably not going to rip as quick, it could, but I knew, like, okay, if I'm sitting here in some consolidating mess, probably is going to happen. Just because of, this extended huge push. So coming into it, I kind of just understood that and took the risk. So, coming into here, we retested, and we held 209.50 perfectly. Now, the only reason why I didn't enter here is I'm going to break that down. So we came up, ripped, retested it, and then we shot up real quick. And the only reason why I wanted to wait and like have it like like this break and then kind of a few candles here, kind of sit here, maybe like, 4 to 5 candles here, retest it, flat line at 209.50, and then enter that long. Just because of how quick and, shooty this move was. So broke, retested, shot up, and right here, I was looking at contracts that were 288, and it shot up to 340. So I was like, okay, I missed this move. There's no more risk, and I'm not going to risk 60 cents on my contracts. Let me not get ahead of myself. I entered in 10 call contracts at, I forget what strike price, but they were like at 280 per contract. Anyways, entered in 10 of them right here. I'm going to break this down real quick. So I knew these 209.50 buyers. Okay, we just ripped again. And then I was in the group on Discord, and I put in the chat, I was like, hey, on VC, I was like, hey, I'm going to look at longs again. If we can retest again, fail after trying to push higher, come back down, kind of take out all of these 209.50 buyers. They all get stopped out. Then if we can push back above, retest, hold it again, then I'm going to look to enter in my calls, in which I did right here. So we break, retest, shoot up, fail below, we take that out, and then we start pushing here. And right here, instead of having my stop at 209.50, I gave it this wick low at 208.80, just for it to breathe a little bit, because I know 209.50 is probably going to battle. So that was my new stop. So I was like, okay, in at 209.50, and that was my stop. So that was about like a 25 to 30. I think the lowest it went to was like 260 when I was looking at it. So not that, like, not crazy at all. Honestly, an ideal stop for this rally. So enter in calls here, wait, sit through it. It comes back up, and then it fails back below. Now I want to emphasize, especially on these on equities, you can read the price action at each of these dollars amount. So it, kind of pushes back below. And these intraday wicks were like, it kept bouncing off 210. I was like, okay, 210's pretty big. I need to keep eye on this dollar amount. So it would come up here, trying to hold 210, would fail, and it just kept battling 210. And the whole time I was like, okay, if we push back above 210, I no longer have this 208.80. It is now 209.50. So I'm like ramping up my stop basically. Because as soon as we push out of that, we get rid of these 209.50 sellers. We push back up. Now 210 is battling. Now I'm like, okay, 210's got to battle. 209.50 is my stop. We rip back up. I'm like, okay, here. It is a little sketchy with this price action here, watching it kind of battle and top out with it. This is just kind of the mental notes I take trading intraday and trying to get these short squeeze moves. I'm just like reading this price action. Anyways, it did come up and it failed back below. And people in the group got out right here at this failure 210. And I can understand why, because you have this, short squeeze, fail, short squeeze, fail, and you kind of came up to these intraday highs. I kind of understand why mentally you would want to get out, but it is important to stick to your rules, like a lot, because that is the reason why I made money today and the people in the group did not. So would rip back up here, would come back, and here I was like, okay, the overall idea is this breaking and retesting of 209.50. I would love to see it hold 210, but that is the overarching idea. So it broke, never came below 209.50. And yes, I was sitting in some crappy, consolidation on the contracts. My entrance was here, so pretty much the same entry. And I was looking at 15 cents down. So, kind of just like pump, fail. And then we got the rip. And this patience is so huge. If you're trading futures, this doesn't really apply to you that much, especially consolidation on the idea of, setting your stop and not just like getting out, because if it's like not acting how you want it to act. But especially for options contracts, when you are sitting in consolidation and you are, you're in drawdown, do not forget the actual idea of the trade, because it sucks. You want it to rip, especially for the contracts. You want it to rip and just go, but it is very important just to trade your idea and stick with it, because of course everyone got out. Boom, we rip. So I was in at 10 contracts at 280, and I scaled out and got out at 350 at these tops. Not that crazy. I think I got in at this fail candle. I was like, okay, I got 212. This is a good dollar. This is good risk. We have this for, that. So I was like, all right, you know what? We'll take this. This is way more than what I would have lost, and I'm going to take this, because also setting this up, I also had this wick high. Just more mental notes that I take. Boom, fail, kind of these topping out wicks. So that was my next, 213. I wanted to scale out at 213. That was my original TP. But ended up not getting it, and the market was pushing so hard, and it started to kind of pull back a little bit. So I was like, okay, we're overextended on this move. we just had another quick, awesome rally. I'm not going to be greedy. And then, yeah, got out. So, key takeaways is get your setup. If you get it, take it. If it's not going how you want it to go, sorry. Stick with your stop. Yeah. So that's kind of today's lesson. Hope you guys enjoyed. Subscribe. I'm gonna have more content and stuff. Hopefully have a whole course maybe for everyone. So if you're interested in that, that's gonna be coming soon. I'll maybe upload a video on like who I am, more about me, my trading journey, whatnot. But yeah, see you guys soon.